Welcome to another episode of
Rock the Crown.
Today, you have joined us on our episode, a segment that we're doing called Boss Building, and where we decided to focus on different business aspects that can help you build your business more efficiently. Whether it's that better processes, procedures, different social media shortcuts. That's what we're going to be highlighting in these different segments of Boss Building. Today, since it is tax season, we are going to be focusing on some questions that we have gotten from our viewers regarding different aspects of taxes today. So we are excited about that, and we are glad that you all are writing in and sending us your comments and suggestions and questions, particularly when it comes to business. So we're going to get started with our first question from our viewer Aisha in Atlanta.
Aisha.
She wants to know, she says, if I am legally married but my husband has tax issues, can we file separately?
Yes, you can. As a married couple, you actually have two options. So you can file married filing separately, or you can file married filing jointly. So sometimes when one has a little more issues going on than the other, it may be a better tax benefit for them to file separately. And so it sounds like, Aisha, with what you have going on with your husband, it may be advantageous for you to file separately. So sometimes it's better, some couples are in a position where it's better for them to file jointly, because there are typically greater benefits in filing jointly. But in your case, and in any other case where it's a special case, you want to kind of look at it case by case. So It's kind of like no shoe size fits all, right?
Right.
So you have to kind of figure out what your situation is and figure out what's going to be the best way for you to file. But I think in your case, it would be separately.
Right. And you also want to keep in mind, too, that when you do file separately, married filing separate is one of the most penalized filing statuses, right? So when you file married filing separate, you don't get the earned income credit. You don't qualify for a lot of other credits that you ordinarily would qualify for. So you want to keep that in mind, too, in deciding whether you want to choose married filing joint or you want to file married filing separate as well, too.
Right. Another question that often comes up is people want to know, when can a married couple or a married person file head of household?
Right, and I know a lot of people do this on the slide, right? They do this on the slide, but legally, if you are legally married on December 31st of any given year, you have to file married filing joint or married filing separate. However, there is a special provision in the law that will allow you to file head of household if you have dependents, even though you're married. Now, you only going to get this special privilege if you are what's called considered unmarried. And that's going to be if you are legally separated. So if you have an actual court document of legal separation, or if your spouse did not live with you during the last 6 months of the year. So if your spouse didn't live with you during the last 6 months of the year and you have dependents, you will be considered unmarried, and you can then file head of household status, even though technically you are married. So you got to make sure that you meet those, criteria. Other than that, no, you cannot file head of household on the slide. Okay, you can't do that. So that's our question. I hope that answers your question, Aisha.
Yeah, I hope so.
And we have another question from Monique out of Dallas, Texas. Monique wants to know, as a mother, what are some credits I can take?
Okay. So Monique, one of the first credits that comes to mind would be the earned income credit.
Yes.
So the earned income credit, it is based on your income, so you have to qualify with the income standards. But that allows you to take income credit for your time that you worked and for the dependents that you took care of. Another one for children would be the child tax credit.
Right.
And then there's also the dependent care. So when you pay for whether it's daycare or even summer camps, I have one sister that asked me about summer camps after school.
Right.
So anything that where you had to pay someone to take care of your children while you worked would be allowed for you to claim. And then another one is the education credits. So if you're in school, then you can file the education credits. And then there's also, a lot of us are non-traditional students, right? So there's the lifetime credit. And that's an education credit where if you're in school, you're continuing, or you're in a different type of program that may not be going towards a degree, I believe, then you're able to also claim that lifetime credit. And all this information is available online, for you to just kind of search up and find out. But those are a few of the credits that you would be able to take, Monique. Thanks for submitting your question.
Right. And I just want to take a quick pause too, because most of you all are new to our show, Rock the Crown, as well as our Boss Building segment. So you might not have heard our introductions, but we want to let you know that yes, I am a CPA and tax attorney. We are qualified and experts in our area to give you this particular information. And Dia is an accountant and works in finance in that area as well. So we do have a lot of experience, and we work a lot with small business clients as well as individuals and high net worth individuals as well. So these are the experience we're coming from and bringing you these tips from our experience as well as, also from the law, because we have to review this stuff every year because, tax laws change every single year.
Yes, you're correct. So the next question comes from our brother Khalil from Jacksonville. Brother Khalil wants to know, he says, I set up an LLC for my business, and he wants to know, how does he file his taxes for that?
Right. Okay. So this is a good question that we usually get, and it depends on a couple of circumstances. First of all, when you say you set up your LLC, I'm assuming you set it up officially through the Secretary of State for whatever state. For again, you're coming from Jacksonville, Florida, so you actually officially set it up through the Florida Secretary of State's office. And then one thing you have to keep in mind is that whether it's a single member LLC or whether you have an LLC with several different partners. If you are the only owner of your LLC, then that's what's called a single member LLC. And for tax purposes, they basically just kind of disregard that entity. So you don't have to file a separate tax return for your business in that instance. Instead, you will file that on your regular personal return on your Schedule C. So whatever business income and expenses that you have for your LLC, that would just be listed out on your Schedule C on your personal return. If, on the other hand, let's say you and your wife both own the business, or your wife and your son both own the business, or you just in the business in that LLC with other partners, then you will have to file a separate tax return for that LLC business itself. And hopefully you have applied and gotten a EIN number just for that particular LLC. And then from there, that would generate what's called a K-1 to all the owners, and then you would use that K-1 and what's listed on there for your personal tax return and capture that. So I hope that kind of answers your question, Khalil, in terms of LLC and how to file that on your taxes.
Yes, so another question a lot of people have sometimes is they want to know about what sometimes they have a 1099. So they receive a 1099 from a company, but maybe they have not established their business, have not established their LLC.
Right.
So what do they do in that case when they have those 1099s?
Well, this is a case too where you have 1099s, but you haven't officially set up an LLC or set up your business with a separate EIN number or anything like that. You can still put these 1099s, the income that you have from them, on a Schedule C, and what will happen is you put the income on there and then just list all the expenses that you had in order that you had to generate that particular business. So you're still going to have that on your personal return on a Schedule C, and you want to make sure that you capture all that 1099 income on your Schedule C, because they do submit it to the IRS. And so the IRS is going to have that information. So you want to make sure that you captured it so you're not more subject to any type of audit or anything.
Yes, definitely. Okay, and then our final question is from Monique. Monique writes in, Monique from Dallas. Monique writes in, I'm sorry, we already did Monique's question.
Yeah, we on Asia from Chicago.
I can't read my own writing. Okay, so Asia from Chicago wants to know, she says, I just got a raise. How will the new tax laws affect me?
Right. So that's going to depend on what tax bracket or how much your income is, Asia. Okay, so that's going to depend on that. So I know with a lot of the new tax laws, different people had different effects from the new tax laws. Some people, depending if they were on the lower tax bracket, it might not have affected them as much because they still were eligible to qualify for their earned income credit, the child tax credit, and that type of thing. But a lot of middle income people did find that when the new tax laws were implemented, that they owed more taxes in terms of their tax bill. And so if that is the case, what you can do, Aisha, if you feel like that maybe your increase and you're worried about making sure that you don't owe more taxes when you file your taxes at the end of the year, you can, one of the things you can do, you can change your W-2, your W-4 with your payroll department. And all you're doing there is you want to make sure that you can either have less exemptions on that form, or you can designate a specific dollar amount for them to take out of your check each pay period. So that's one way that you can do it. Also, if you feel like I might not want to do that, I might just instead want to just send in maybe a lump sum payment. When I get those lump sum payments or whatever, you can send in estimated payments. You just want to make sure that you send that before the end of the year because you don't want to have any penalties for not paying in enough throughout the year. So those are just some of the things you want to think of, Asia. When you get your promotion, you want to double check your withholding with your payroll department, and you may need to, like I said, add additional to that so you can get more taken out of your federal and state taxes as well. Don't forget about your state taxes.
Yes. So these are all really great questions, and I hope it's been helpful for you all. I was just telling Nafisa, we were talking about some of the really interesting questions that we get, sometimes even strange questions that we get. So one of the questions, and I hope they're not listening, but one of the questions is, a person once asked me, can I claim my dog as a dependent? Really? Because when you think about it, I'm just trying to give them the benefit of the doubt. Because people nowadays, they spend so much money on their pets. The pets go to the doctor, the pets get clothes, the pets get shoes. So I guess they want to know, hey, that expense is increasing. So they want to know, am I able to claim that?
Well, they haven't written that into the tax law
yet.
So no, you cannot take your dog as a dependent. Okay.
Or other people's children. Okay. I want you all to be very, very careful of doing that. Okay. The IRS is cracking down on those types of things. We have to really make sure we stay on top of it, because being hit with a huge tax liability can really put a dent in your finances.
Okay. Not to mention that's called fraud. That's against the law. You can't take anyone as your dependent unless they actually your dependent in terms of you providing over 50% of the support. Okay, so I know people say, oh, well, I only need 2 on my tax return. You take my other 5. You're not supposed to do that legally. Okay, and that is fraud. So don't do it.
Don't do it.
Yes.
What's one of the questions that you got?
One of the questions I've gotten is, I'm going on with this vacation to Hawaii. Can I deduct that on my tax return?
Okay, honey. Unless you're going to Hawaii to meet a business partner and you're planning on selling some luau skirts or something like that, then no, you cannot. I'm sorry. No. Okay, and then one more, and this one is, it's kind of, it is like a little gray area, but, we do get deductions for our home office.
Right.
But someone once asked me, okay, so I just redecorated, at my home and bought some furniture and did this and did that. Can I write those items off?
No. Okay. You can only take as an expense your desk and computer and that kind of stuff in your specific office. You cannot take your whole furniture bill, right? For your whole house, you decided to redecorate. You can't deduct the whole thing. Okay. Just only what you have in your actual home office.
So I hope that these answers were helpful to you all. Please continue to write in. Let us know what questions you have in the area of tax, business, finance.
Right.
We will try our best to get the answers that you need. We are wrapping up this session of Boss Building. Okay, I want you ladies and gentlemen to tune in again next time. Like us on Facebook, follow us on Instagram, and subscribe to our YouTube channel.
And join us next time on
Rock the Crown.